In this video, you're going to learn how supply and demand work in the market. I'll be teaching you how to get high quality supply and demand zones in the market. Zones that are very, very profitable and will give you great profits in the market. I will also be teaching you the best supply and demand trading strategies for synthetic indices. There's a lot you're going to learn in this video. Now, let's get to it. So in this video, I'm going to be teaching you about supply and demand. And as you can see, we have a very good supply area here, which this line is representing. So one thing about the supply and demand is that supply and demand is like support and resistance. But for support and resistance zone, you can use them multiple times on the chart. You can move to the future and you will see a lot of them on the chart and you can use them. But when it comes to supply and demand, you can only use it once. So you're using the supply and demand once in the market. And after that time, it won't be valued anymore. So you will just leave it and look for another area of supply or demand. So what is supply and demand? Supply and demand are those areas where the market has moved with strong volatility. And as traders, we expect that when the market gets to that point again, it will come back with the same volatility as it did for the first time. So the supply and demand is made up of two steps. Number one is this is the first step. So here, this is the first one. When you see something like this, you will draw your supply and demand. So drawing your supply and demand, you can draw it on the candle, the first candle, this candle here. You can draw it on this candle. So if it is bearish, let's say you are looking for a supply area. If the last candle is bearish, you draw it on the wicks. You draw your line on the wick. But if it is bullish, you draw it on the whole candle. So now this supply area, you can see that the candle is bearish, so we can draw it on the wick. So you understand, that's the first setting of a supply and demand, knowing where to draw out your supply area. So when you have drawn out the supply area, the first thing you have to know is that you have to make sure that this place has a very big movement. And how do you know that? First of all, you zoom down. So you can see that the market was moving like this towards this point. It was moving like a little uptrend. But when this supply came out, it was bigger than this first little price movement here. So that's one very important thing to watch out for. If this one is bigger than this one, it is not going to work. So you must make sure that these smaller ones are not big as this one. So this one is the big one. And that's why we find it as a good area of supply. So now, since we have that good area of supply, when you have something big, something that is bigger than the last price movement, so you draw out your supply and then you wait for the market to return to it. You can see you wait for the market to return to it and fall down from there. Now, let me show you another example of this supply and demand on the chart. So right here, we have an area of demand. So like I said, the first thing you do is to look out for the previous movement before the big price movement here. So you must make sure that there was no price movement that was larger than the demand area that you were looking out for. So when you have When you have done that, that's the time. Then you now try to draw your supply and demand area from the last candle. And if you watch out, you can see that this candle here, the wick is lower than this one here. It's lower than this bullish one. So in this case, you are going to be drawing out the supply from the wick of the last bullish candle. Why? Because it is bullish. When you are drawing when you are drawing a demand area, the first thing you do is that you make sure that you understand the direction you're going to. So in a demand area, it is very clear that you're looking for an uptrend. You're looking to buy the market. So we draw out the wick. So when you have drawn out the wick, the next thing you do is to now wait for market to return to that demand area and then move up. Now look at this. I like some most times I like to trade market that look like this one. Like right here you can see that this market was very very clean. It came down clean, gave us a demand area because the market moved very large from that point. Then it came down. Now the thing is that sometimes the market can give us a movement like this and then it will continue going up. You understand? So it will continue going up. So at that point it doesn't want to give you a trade. So it's not interested in giving you a trade. So that at that point you just leave the market to go. But if you are very fortunate and the market is now returning to that demand area, that means you have to take it very serious and see how you can take a trade. This is a very beautiful demand area on your chart. Now let's take a look at another example of supply and demand. So right here we have another supply area. Remember, when you are trading supply, you want to sell the market, and when you are trading demand, you want to buy the market. So right here we have a supply area. Look at that movement, like the previous one I showed you. Look at the movement, very clean before it came down and gave us a supply zone. And when the market gets to it, we can now find an opportunity and trade the market. So that's very, very simple. But one thing, if you have noticed one thing about all this supply and demand that I've been showing you guys, you notice that at the last point here, before the market start going down again, there is a candle you see, and that is an engulfing candle. An engulfing candle is very, very good for trading supply and demand zones. If you use the pin bar fails a lot. But if you use engulfing candles, you'll be able to get more trade from the market. Like for example, look at when the market came to this supply zone here and it gave us an engulfing candle, the market did not trade above it. You can see that the market tried its best to trade above it. Plans didn't work. So that's why the engulfing candle is the best for trading supply and demand areas. So when you have an engulfing candle, you can take a trade. That's our signal candle for the supply and demand. So when you're trading, when you have a supply and demand area, like for example here we have a supply. When you see when you see a bearish engulfing candle, you can take your trade and enjoy your profit and make money. So look at this here. So here we have the engulfing candle. So let's imagine you were in this trade here. What will you do? The first thing you do is that when you see this engulfing candle here, the way I like to take my trade is that I first of all try to understand my risk for that trade. Let's say, for example, I'll place my limit order here so that I can be able to know my stop loss and take profit. So now it will now depend on the risk that I want to take for that trade. So the take profit target is always at the next low. That's the low of the supply area. So In case you don't know what's the supply low and high, this is the high of the supply area, and this is the low of the supply area. So when you have this, you place your stop loss above the engulfing candle, and then your take profit target at the low of the supply area. So now, when you have this, the next thing you do is to check your risk. You have to know the risk that that you are going to trade in the market. So, for example, you want to risk like $5 for this trade. No, volatility 10 starts with 0.5. So, if I risk 0.5, it's $2.92. It's not up to my risk yet. So, let me increase it to 0.7. All right. Now, this 0.7 and it's 4.09. I want to risk $5. So, I will increase it again to 0.9. Okay, now it is too much. So, let's settle with 0.8. All right, this is beautiful. But if you want to increase it more, you can still make it like 0.85. You understand? So that's perfect. Now we have a perfect risk for this trade. Just $0.03 from our risk. Our risk is $5, but now we are going to risk 4.97 to get $17.15 for this trade. So that's how beautiful a supply and demand trade can be. And if you know something like this, you will want to trade with supply and demand that have better risk margin. For example, this type of trade here is profitable, but there are some that are very like too tiny, supply and demand, very, very little. So those ones will give you enough profit, but focus on the large ones like this one. Now, let me show you another example. All right, so here we have a supply zone again, and you can see that we draw out our supply zone from the last candle. The last candle was bullish, so we can draw the whole body of the candle. So now we have drawn the whole body of the candle. The next thing we do is to wait for the market to return to that supply zone again. And right here, it's returned to the zone. So like I said again, if you returns to this zone, the next thing you do is to look out for your engulfing candle, which is your entry candle. You must have an entry candle for you must have an entry candle for all your trades, and an engulfing candle is the best entry candle for a supply and demand zone. So now we have the engulfing candle, and this is the engulfing. We have engulfing candle here. So the next thing you do is that you understand your risk. Let's say you were there when this engulfing candle appeared on the chart. So what you do is that you try to understand your risk. Like as I said before, let's say you're risking let's say you're risking $20 now for this trade. So this is where the market closed. This is where the engulfing closed. This is the low. I mean, it is where the engulfing closed at this point. Let's imagine you were at the market at this point when it closed. So you place your stop loss above it. Now your stop loss is 4.32. Now for me, I would like to increase it a little bit, even if it's a little bit. I just increase it. Let's see if I can get $5. You know, okay, let me make it 0.9. 0.9 is still not enough. Okay, let's make it 0.95. It's still 4.83. 0.98. Okay, now you have 4.99. So you place you place your take profit target at this point. Okay, this one, let's imagine I'm risking $5. So if I'm risking something like $20 for this trade, I have to increase it. Let's say two. If I increase it to 2, I will have 10.18 as my risk. So let me increase it to 3.8. That means I'll be risking $19.33 for this trade. And I'll be making $61 for the trade. So it's very, very simple like that. Once you have your engulfing candle, you start marking out your risk and reward. Make sure that make sure that it's an engulfing candle that appeared at the top here. Don't trade any other candlestick apart from the engulfing candle. And when the engulfing candle appears, you do just what I just told you right now. Now we take another example. Let me show you another example on this chart. Alright, so this was like the first this was like the first example, one of the first example I showed you guys earlier. So that time you don't understand that we are going to be using engulfing candle to trade the supply and demand area. So right now we have a supply area here, and if you follow all the rules that I've told you, you will know that you have to draw it out from this candle because it's a bullish candle and this is a bearish movement. So when it's a bullish candle, you draw the whole candle. When it's a bearish candle, you draw only the wicks. But right now we have a bullish candle here, so you just draw it out. And when the market has gone down, you wait for it to come up. And when it has come up, you look for an engulfing candlestick. And at this point here, we have an engulfing candlestick here. Look at it here. This thing is very easy. You can find it on your charts. You can find it on your chart. And it's very, very simple to trade and very easy to identify. That's why a lot of traders like trading supply and demand areas. So now when you have that, you place your sell limit, your limit order to understand your risk so that you know how much you're risking for this trade. So you don't hit any lot size just like that. So let's imagine I want to risk like 50 for this trade. This is 6. Okay, that's too much. Alright, let me make 5.5. Alright, that's too much again. 5.1. Now it is very low. Let's do 5.2. Alright, now I have a very good figure for my trade. Now, if I'm risking $50 for this trade, how much am I going to get? If I place my take profit target at the low of the supply, that means I'll be getting $133 risking $50. Alright, what if I'm risking 10 for this trade? Say I want to risk $10. Let's go with something like 2. I mean 2. 2 is too much. 1. Let's say 1.2. That's too much again. 1.1. Too much. So let's go with 1. Let's stick with 1. So if I risk $10 for this trade, I'm going to be making $25.67. That's a very good risk to reward ratio. A lot of traders don't even see something like this. A lot of traders will take a trade and risk $10 to make $10 or $12, which is very, very poor to me. So this is the kind of trade that I like you guys to take in the market to become profitable traders. You risk less than your take profit target so that you'll be able to win a lot in the market and move progressively. So if you follow this strategy that I've told you guys, you will make a lot of profit from the market and you won't find it anything. You won't find it any way hard for yourself. So with this supply and demand area, you can be making your own profit from the market. In my VIP program, the kind of trades that we take there are trades that gives you very high profit in the market. Like for example, let me just use this chart for example. Let's say we have a trade here. We don't risk much on our VIP program. Let's say we risk $5. Sometimes we risk $5 to make $29, $35. That's the kind of risk that we take in my VIP program. And a lot of times our take profit target gets hit. If you want to join my VIP signals group, you can check the link in the description box below to join us. And if you are new to Deriv synthetic indices, the link is in the description too, where you can sign up with Deriv and start making money with us. All right, see you next time.